Good morning, traders. It's 6:41 a.m. Chicago time, 7:41 a.m. Eastern time on Tuesday, the 6th of September, 2016. This Trader Bite's being recorded early. There's still an hour and about 15 minutes till the market opens, so a fair amount can change. However, our primary hypotheses post-market yesterday or Friday are intact, and we have to make some adjustments for the open, and I'm sure by watching these videos for so long you can probably do that yourself. But given that it's the first day of school today here in Chicago, and both my kids going to new schools, I'm going to be taking them to school, so I apologize, but this is pre-recorded. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news over the weekend. The key element here being that Russia and Saudi have agreed to cooperate to stabilize oil prices. And to top that off, Iran has offered cautious support to that endeavor. But oil is off a little bit this morning from where it was yesterday. It spiked. If you look at an oil chart from yesterday, it spiked up and then it came off, and it went back to the scene of the crime, mainly because the meeting between Iran and OPEC generally led to little in the way of progression. Again, the Iranian oil minister reiterating his Russian counterpart's comments from yesterday, suggesting that $50 to $60 per barrel is a fair price for both consumers and producers. So there's a push for that. That's key news. That's driving the markets. In addition to that, with the numbers coming in fairly decent on Friday on the non-farm payrolls, the Fed is in a position, could be in a position to actually do something about rates finally, because the market's showing a lot of resilience. The market is higher despite with credit conditions pretty tight, volatility's fairly tight. We've seen that over the last 2 months since Brexit, and it's essentially the market has made its way through the Chinese capital issues that happened last year. It made its it fared pretty well through some pretty good liquidation movement on Brexit, on the vote panic, and it's holding steady. It keeps bouncing to new all-time highs or close to all-time highs despite these shocks, and so it just gives it a little bit more room. It gives the Fed a little bit more room to move. So we'll be, again, that's what gives the market the jitters right now. But overall, the market is complacent in that it's seeking risk immediately after the news shock is over. It's the first day of the week again, it's a shortened week here in the United States with Labor Day yesterday. I have removed the data from yesterday, or from the Sunday session. It's considered just off, and have scrubbed the data. So in my charts, I will not be showing any data from Sunday, but we'll pick up from 5 p.m. Central yesterday on the reopen going forward. It's the beginning of the week, so let's look at what's on the calendar for today. We've gotten a couple of important releases. Key being the Reserve Bank of Australia. Australia leaves cash rate target at 1.5% on hold. Remember, Australia was reducing its rates and has seen from these low interest rates have been supporting domestic demands, and the lower exchange rate has really helped that economy out. Swiss August CPI came in line at negative 0.1%. The Swiss economy is growing at its fastest pace since 2014 on state spending. There's quite a bit of help there from that government. But as far as what we've got on deck for today, we have at 9 Central, 10 Eastern, we have U.S. Labor Market Conditions Index change for August. I have not seen that one before. Also, IBD tip economic optimism prelim expecting 48.1. This is a low tier number. A higher tier release also at 9 Central. 10 Eastern is US ISM non-manufacturing for August expecting 55.0. As far as speakers, not seeing any key speakers on deck for today. And of course we get the 10:30 Central, 11:30 auctions, the 3-month bill, 6-month bill, and 4-week bills all mushed into one. The total value of that is about $116 billion in auctions. For tomorrow, German factory orders and construction PMI, Euro GDP government spending, US PMI, labor market, and ISM tomorrow. And then Wednesday, we're looking for industrial production in Germany, Halifax housing number, and industrial production, manufacturing production in the UK, Fed Williams speaking in the US, and then the BOE has got 5 speakers on Wednesday, so look out for that, especially if you're trading the pound. Thursday, Germany's got labor costs, European deposit and refinancing rates. So we're going to see the ECB announcement this Thursday. And then consumer credit in the U.S. Friday. German current account, trade balance, UK trade balance, construction output, and the BOE comments. And then GFK inflation. The U.S. has wholesale inventories on Friday, and we get Fed's Rosengren and ECB's Costa. Pretty busy week as far as releases coming up, but also I want to remind you that on Thursday we roll to December. Yes, it's that time of the year. The September contract's coming to an end, and we're rolling over to December this Thursday before 8:30 Central Chicago time. That's the official rollover time, and that's when I'll be quoting December, and all of my charts will reflect December. Again, Thursday, all U.S. indices should be rolling and trading in the December contract. September will have about a week before expiration. Next week is expiration week. Not this Friday, but next Friday is quad witching. Let's take a look at what we expected for Friday. Friday, the expectation was for the market to open sideways in an open auction. Expected a test down right here. Let's change the color. Expected a test down right there, but overall was looking for the market to hold its position at 179 and a quarter. That's what we're looking for, and that's basically what we got on Friday on Hypo 1. Hypo 2, I was looking for a test higher into the 179 and a quarter early, and then to find sellers, and then for the market to start pushing lower, and the target for that would be 2166.75, the point of control from the prior days. You see here, this did not take place, of course. So those are the key trade ideas for Friday. Here's what actually happened. The market, remember this is the figure. Just 1 second. This is the figure right here. This is the key price up here. We opened right at it. Open auction out of range. We test lower. We get a decent rotation up, which is pushed down. We see a big rotation down here, the biggest rotation down of the day. 6 points of tests of the mid, multiple tests of the mid and consolidation, looking for a continuation lower, and we got that, and that was the cleanest trade of the day right here. As far as I'm concerned, and then the market ultimately ends up coming back and testing the prior day's high right there and right there. That's the completion move, and then the market moves back to the MC point of control. Again, the key figure up here. Note that the point of control from Friday, the most traded price from Friday, is right up against the MC point of control. The market's in balance. The profile does not show clear balance, but it does end up with a very high kurtosis point of control here. There's a lot that went off at the 2178.50 price, and the bulk of trading occurred in the middle of the range. It's not exactly a Gaussian curve or a bell-shaped curve, but the market showed balance on Friday. It tested higher up here, found its sellers, tested lower down here. Found its buyers. A good taper on the low right against this MCLVN, against the prior day's high, and overall the push down was contested. You could see a lot of volume up near the high on Friday, but that's basically, we basically got hypo 1 with the test down occurring later in the day instead of earlier. If we look at all right, what's going on here? If we look at how things looked, out of control, my mouse clicks today. If we look at how things look from a market profile stance, this is what I was talking about on Friday. We have a peak day right here. See that high is the highest high. Then we have one-time framing down, lower high, lower high, lower high, lower high. These are all lower highs, and that's what we call one time framing down. It's a way of establishing the trend. We don't look at the low. We're interested in how far the market is able to push prices on the high side, and if it fails to push through the prior high, we call that one time framing down. And on Friday we canceled that one time framing down. Normally we end up with a neutral type of day, a balanced neutral day, which is what we got. And then in general, this creates 1 or 2 days of balance if it's slow, and then we start to reverse the trend and start moving up. We still have those 2 island days up top from the 23rd and the 15th, and their point of control is 2190, and that becomes the next major target above 2179 and a quarter. That's the high volume node up high. So overall, I don't see any singles or anything up top to test, but the market is set up to start rotating higher in the time being. Overall, if you look at the daily and what we have done, the last few days we've had some okay range, but the daily overall, when we expand this profile going back to July 12th on that gap up, you'll see that we have spent the last month and a half in this balance zone that is about 60 points or 53 points deep. That's it, 53 points in 2 months. That is very, very tight, very low. And it, it explains how the market's traded recently. So we're still stuck here. We're up against the point of control of this mess here. Remember, at 2179 and a quarter, and it looks like we're likely to start moving up to test the areas above 2185 and then more specifically 2190. So what do we have for today? When we look at the overnight session, not much there to play with. We're trading well inside of Friday's range. Pretty high kurtosis overnight. It's still early. It's almost 7 a.m. here in Chicago. Still early to judge the volume, but it is light. We have 80,000 at this point. It might accelerate into the 8 a.m. Hour here in Chicago, but it's still, the market is completely balanced. There's a fair amount of support down here in the 2177, 76 area, and I would be watching for that being the area to breach to start moving down. That happens to be the overnight low as well. The overnight low is 2177, but essentially the support area from Friday is right there at 77, 76 half. I would keep an eye on that as a gauge for how weak the market is becoming. This morning, the expectation is, unfortunately, there's quite a bit of time left before the open. Let's shift these profiles forward to see where we are. When we shift the profile forward, we see that we're building in the balance zone in the middle. Still, we keep building this deeper and deeper and deeper balance. But if we end up holding these prices on the open and looking at our opening hypotheses, the expectation is for an open auction and then for the both sides of price to be tested. I expect the 2176.50 or so to be tested, and then the expectation if this builds enough compression here, enough volume, the expectation is for the 2183 to go. Move to 2186 is expected for today. That would be the primary hypothesis. I'm expecting the market to chop around a fair amount before it does that. The secondary hypothesis is if we open in range, in value on Friday, I'm looking for a test up. If a test up fails to find continuation from the buyers, I'm expecting it to rotate down, get below 2176 and a half, break below, and cannot get back up. And then we start to again resume the one-time framing down, and our target then is 2166 and a half from Thursday. That would be hypo 2. Okay, that's how things are shaping up. Again, this is more of the same. We need to kind of wait it out and just let the market do its thing until it starts to break. Don't commit too much to one trade. I'm seeing people pushing their trades too hard, trying to get something out of the market. The market you can only get as much as the market's willing to hand out to you. So just be patient. This is the time to just sit back, relax, and just let the market come to you. Hopefully you're seeing how that works and are getting good at doing that. I'll catch you later on in the morning. Hopefully today is a good day for you. Take care.